So good afternoon, ladies and gentlemen. On behalf of CMA Sri Lanka, let me welcome you for this webinar on value-added tax amendments. And here we are going to discuss the impact of that on industry, commerce, and society. So today we have a keynote speech by Mr. Atul Ranavira, and also after his speech, following his speech, we'll be having a panel discussion involving him and also with 6 other panelists. So to start the proceedings, let me now invite the incumbent president of CMA Sri Lanka, Professor Lakshman Vatavada, to address the audience.
Good afternoon to all of you. Thank you, Ruchira. Our presenter, Mr. Atul Ranavira, and our panelists, and our moderator, Mr. Ruchira Pereira, and all participants. Today we are having a very important webinar on the Value-Added Tax Amendment Act 2023 and its impact on industry, commerce, and society. And of course, it will come into effect from 1st of January 2024, and we have seen a lot of articles and also maybe a lot of speeches on the impact that this will have on the economy and of course the society. Recently, of course, I was just listening to what the governor of the central bank was saying, that we have to control the inflation, and they brought it down to a very low figure, 1 to 1.5%. As a result, their main purpose of the reduction or bringing down the inflation rate is to see that the prices of goods and services will also come down. So today, what we are really going to talk of is the Amendment Act of the Value-Added Tax, where the rate has been increased from 15% to 18%. So everyone will definitely know it's a 3% increase that is going to be there. But as management accountants, we really want to find out what would be the real impact on the maybe the customers and the society, because we do not want any other additional costs which are really not connected with the production of goods and services. Unfortunately, our country, of course, the cost and the management accounting body was set up in 2009, but the implementation of the very important areas of bringing the cost elements in, having the cost records, and also ensuring that the overheads are not added on to the costs, which will really make products uncompetitive. So today it is very essential that we give a lot of prominence to the management accounting profession, which is really on the operational area and also on the costing. Because when sometimes the prices are increased, if there is no methodology for calculation of the prices, definitely this is going to be a major problem. And we have now commenced the Cost and Management Accounting Standards Board, which will set the methodology for calculating the cost prices. Unfortunately, the government has still not adopted this, but I think if they really want to ensure, because today one of the biggest problems is the rising prices, how the prices have gone up, how the costs are calculated, everyone has to be told how it has to be done. It is not by taking all the expenses together and adding them together, say that this is the cost of the product. That is not management accounting. That is some ancient accounting which is there in our system, which is really not correct. So no one knows exactly what the situation is. So today, with the increase in the VAT, if it is from 15 going up to 18%, definitely there is going to be an increase, and everyone will really have to have this increase that will come. How they are going to meet this increase is something that we need to see. But I think also there is a although everyone says it's 3%, there are also certain exempted items that were there, more than 100 or close to 200 exempted items that were there, which were exempted. So if we are now going to take some of those products, either 90 or 100 items of those, and then subject them to tax, the impact is not 3%, but 18%. Then they will also have a spiraling impact on all other costs. So I don't want to delve too much in detail on those matters because our speakers and panelists, because today it's not only knowing the tax, but also the impact on the different industries, different services, and government is looking at revenue. Of course, revenue has to come in, but they have really forgotten that this cost aspect, because we have to bring this cost aspect, because we will see that a lot of these areas, the if the costs are not controlled, then we will have a major problem. So I would say that government should also cut down their costs. If they don't cut down their costs, if they only go for increase in revenue, I think that is not a fair basis of treating the society and also burdening the. So I think it has to really come from the top. Everyone has to cut down their costs, and I know definitely if we cut down our costs, then I think we have a reason for paying additional taxes and also meeting it, because today still we have not worked out how we are going to repay the big loans, maybe 100 billion rupees in debt, how we are going to repay it. We've still not been able to come to terms with the creditors. I must say that the central bank is doing a very good job, because they have really structured themselves of bringing the inflation down. But do you see the other sectors doing that? If the prices of the electricity, if other items go up, then the inflation will also go up. So if the same efficiency that is there, maybe with the central bank, has to be there with the others. So the management accounting is that. That's why we are really interested in these items, because people must know how the country can benefit due to management accounting. We have to make it mandatory, or we have to make it compulsory. Otherwise, there is no way, the banks will also collapse, because they will not know what is happening, or if there are no records at target. The Companies Act will have to be changed to include these things, cost records. Then only really we can work out the cost. So that's why our CMA, the Certified Management Accountants, set up in 1999, but incorporated by Act of Parliament in 2009. The Cabinet of Ministers, the members of Parliament have passed it. So the bureaucracy, all the public servants have to now ensure that these are implemented, and we will be able to support them in this area. So once again, let me thank all our the speakers and the panelists, because they have come here to give their views, because it's not only one party, but all sectors that are going to be affected. How you are going to price your products? You may increase it, but then certainly it must be something that will be done properly and correctly. So management accountants definitely will be able to add value. Now we are saying value added tax, but we will be able to add value to these organizations and help them. So once again, let me thank. I think we have had about 700 registrations. People are still coming in. 291 is the number at the moment, but I know that there will be more than 300, 400 people, because this is an item that people are interested in. If it is going to affect them, they will definitely want to see it. But we also know that we have to have now savings. Now, if the central bank has brought down the interest rate, so that means if you have deposits, your interest is going down. So everywhere, then the price of goods are going up. So I think this is a very difficult time, that the real agenda of cost cutting has to come from the top. I think they must say flat 25% cut, or even 30% cut. Then we don't have to pay all these taxes. We will keep our educated people, the professionals in our country, because they need to build this country. Otherwise, everyone will go abroad. And unfortunately, I think IMF has not costed the value of producing the professionals. Maybe the doctors, engineers, accountants, architects, everyone, they have not costed. They've costed only the cash value. And then it's also going to have a serious cash flow impact. That's the other important thing. I'm sure all our speakers will mention this. So let me once again thank everyone. And I'm sure that this would be a learning exercise, which everyone will be able to know what is in store for you in the new year. 1st of January, what you are in store, and all the others will have to get ready. But I do hope that those who are in industry, commerce, and services will not burden the society too much, and they will also take action to reduce costs, and also where the management accounting profession can play a lead role. So thank you, and I hand you over to our moderator, Mr. Ruchira Perera.
Thank you very much, Professor. As always, you have set the tone, and you have mentioned the role that CMA and also management accountants can play in this bigger picture. Not only we need to focus on increasing revenue, but also we should try to maintain our cost accounting records, and we should try to minimize cost as much as possible. So to start our discussion today, as I have told you, we will first start with a keynote speech, followed by a panel discussion. So to deliver the keynote speech, now I have the pleasure of inviting Mr. Atul Ranavira, who's a very close friend of us. He has developed our curriculum, CMA Sri Lanka curriculum, and also he has delivered many presentations on tax. Mr. Ranavira is also the managing partner of Ranavira and Associates. Mr. Ranavira, I have the pleasure of inviting you to deliver your speech on the value-added tax amendment and the impact of that on industry, commerce, and society. Over to you, sir.
Okay, Ruchira, thank you very much for the nice introduction. And good afternoon, everybody. You might think that my backdrop is in the mirror mode. Why you say not
It's
because
okay,
that,
it's correct, it's correct.
right? Is it correct? Right. Anyway, right, today, within about 20 to 25 minutes, I will cover the recent amendments, and the amendments are to be legislated in near future. To facilitate that, I will open a PowerPoint presentation. Then, yeah, I will open the PowerPoint presentation. I think it is visible to everybody.
Yeah, yeah. Okay.
Right. Now, recent VAT revisions. There are some proposals, new proposals via amendment bill, what they introduced 2 days back, 4 days back, that is on 14th, under the 14th day, they gazetted the latest amendment bill. Then meanwhile, they legislated the bill, what they gazetted on 31st August, they legislated as VAT Amendment Act number 32 of 2023. This act is already gazetted, already legislated. Then there's a pending bill also, right? Then we'll see. Now, in my presentation, I'll be covering some introduction, then the change of these main changes, VAT exemption list, and the rates increase, and the pending proposals also. First, we'll see what are the major changes already occurred. Now, removal of majority of the existing VAT exemptions with effect from 1st January 24. Now, out of our VAT exemption, the majority portion have been removed from the exemption list, and they have introduced a new list effective from 1st January 2024. Then, the second major change is the increase of the VAT rate. As everybody knows, it is increase from 15% to 18% with effect from 1st January 2024. 15% to 18%. Anyway, the financial sector, it was at 18% and continuing at 18%, and the other sectors from 15% to 18% increase is with effect from 1st January 2024. Right. Then there are some more things what we were expected, and they announced that they are going to change, but that hasn't happened. The other thing which they have not legislated is the SVAT system. Actually, the government announced that they want to remove the SVAT system. This proposal was there in 31st August 2023 bill, but at the legislation stage, with the committee level changes, this is not incorporated into the final amended act. Then the other thing is reduction of the registration threshold from 80 million to 60 million. Recently, Cabinet approved this reduction from 80 million to 60 million, but it is not legislated along with this recent legislation. To legalize it, they have introduced this latest amendment bill dated 14th December 23. Now, in this amendment bill of 14th December 23, there are two main things included. One is this income, the VAT rate reduction is already gazetted and it is legalized. But the effect of that, they want to incorporate into the VAT Act. That is one amendment they are expecting through this bill of 14th December 23. The other amendment is to reduce the VAT threshold from a registration threshold from 80 million per annum to 60 million per annum. Right. Anyway, as per the amendment bill, it says with effect from 1st January 2024, this threshold will reduce, but practically that can't do, because now on 14th December they gazetted the bill. Then there's a time period for public objections. Then there's a time period for the parliament discussion and whatever the committee level, incorporating the committee level amendment, committee stage amendments. Then thereafter, it should pass in the parliament. Most probably, it will take at least 3 months to happen all these things. Therefore, most probably, this amendment of threshold reduction may be legislated with effect from 1st of April. But as per the bill, it says 1st of January. Anyway, we'll wait and see. Right. Then what are the major things proposed by the bill of 31st August 23? And out of those things, what are the things they legalize by way of amendment Act number 32 of 2023? We'll take one by one and see. To remove lot of VAT exemptions, yes, that has happened. It is legislated. A lot of exemptions they remove. Then to increase the VAT rate from 15% to 18%. Yeah, that also happened by way of a gazette notification. Now, with the next amendment, they will bring that into the Act also. Anyway, that is legalized. Then to abolish the SVAT system, that didn't work out because mainly our trade associations and all chambers and all objected for this. As a result, government postponed the cancellation of VAT, the SVAT system. Because we don't have a better system at present, we don't have a better system than SVAT. Yes, everybody knows that there are weaknesses in SVAT system. But when we go into these weaknesses, majority of the weaknesses are the administration related weaknesses. These weaknesses are not there in the system, but in the administration of SVAT system, there are weaknesses. These weaknesses are there at the taxpayers level, as well as at the tax administrators level. That may be the after realizing that they have not activated this cancellation. Then, to abolish VAT deferment on all imports, actually, there are some tax deferment, VAT deferment scheme for export production. When somebody is importing certain materials for the purpose of manufacturing something and exporting, there's a system of deferment of VAT. In certain cases. Now, these things, the government wanted to cancel this deferment other than on the garment industry. Keeping the garment industry deferment, they wanted to cancel all other deferment at the import level. But they didn't legalize it. They didn't incorporate that amendment because they didn't cancel the SVAT system. As a result, they didn't want to cancel it. Now, we'll move as I mentioned, the most two important things are the cancellation of a lot of exemptions. The other thing is increasing the VAT rate. Now we'll see what are these cancellation of the exemptions. Now, to support that, for easy understanding, I have categorized this into two categories. One is the remaining exemptions, continuation of the remaining exemptions. Now, out of the exemption, lot of things they removed, but there are few exemptions remaining. Now, first I listed the items, the remaining exemptions. Now, the first one, wheat and wheat flour. I'm not going to read everything. Then I have bolded certain words for easy understanding. The children's, the infant milk powder. Then certain healthcare, I have included the industry or the sector affiliated to these things. Then the health sector, these various equipment, the tools and equipment required for as healthcare facilities, they have continued, and now those items are continued to be exempted. Then in the fertilizer sector, actually this now in this document, certain things I have given in red color, while certain things in black color. These red color things were there in the original bill of 31st August. But at the time of legislation at the committee stage, they changed those things. Now, in this case, the government, as for the bill, they wanted to have agricultural machinery, memories, forks, biofertilizer, effective from 1st July 2024. Likewise, they wanted to have these things, but later on, they removed this red color item, which I have marked as removed. Now, ultimately, it ended up with biofertilizer and certain other things. Now, when we read this, lot of questions are there whether biofertilizer includes organic fertilizer. Definitely not. Biofertilizer, the chemistry of biofertilizer is totally different from the chemistry of organic fertilizer. If any organic fertilizer contains the chemistry of biofertilizer, then that comes under biofertilizer. Therefore, the exemption will continue on that, but not on other things. Right. Then, anyway, we have to wait for the HS code numbers for these things. Now, in the future, the customs department, they will publish these with relate to the import, these HS code numbers and the custom tariff. Then we'll be able to get a better idea on the items, what they have included into this. Then next, agricultural sector, the agricultural seed, plants, shrimp feed, but other than the poultry feed. Poultry sector is totally liable to VAT, but other than the poultry, shrimps, prawns, agriculture plants, agricultural seeds are exempted, continue to be exempted. Then original bill wanted to cover the solar panel models and these the renewable energy equipments from VAT-free, but that they cancelled, they didn't legalize it. As a result, all renewable energy related equipments and accessories are also made liable to VAT with effect from 1st January 2023. Then next, the import and supply of goods at duty-free shops for payment in foreign currency. Obviously, now when those payments are made in foreign currency, we consider it as like either import or export. Therefore, it is not liable to local consumption VAT of consumption tax called VAT. Then supply of public passenger services are made exempted, continue to be exempted, but unfortunate situation, this service is exempted, but their input materials are liable to VAT. That means now when the diesel is made liable to VAT, definitely the bus fare should go up in future. Then electricity. Now electricity including distribution continue to be exempted from VAT. Now even in this case, the electricity is exempted from VAT. But when we take Sri Lanka, the electricity consumption, almost about 30% plus, 30 plus, we are consuming the electricity generating through thermal power. That means on thermal power, the VAT is introduced. As a result, the people who are producing electricity has to bear thermal power electricity. They have to bear the VAT cost. Ultimately, they have to increase their selling price. Then our two electricity suppliers, LECO and Electricity Board, they may have to increase their prices to cover up their input, the credit, what they can't claim. Because they can't claim because ultimate supply is exempted from VAT. Then definitely the cost increase on their thermal power, they have to bear. Then in that case, ultimately it may result to increase the electricity bill. But luckily, for last 10 years, this is the best year, the rainfall, the highest rainfall, we experienced the highest rainfall. As a result, at present, we are generating a lot of electricity through renewable sources. There's a gain on that. Then services relating to burial and cremations continue. Then services with relate to supply of services to be to outside parties to be consumed in abroad, outside Sri Lanka. And the payments is made, which the payment is made in Sri Lanka rupees. Now, this is also a continuing exemption. Now, that means now when we give services to overseas for them to consume it, under the general circumstances, it is zero rated. It is zero rated because it is export. Then it is zero rated. But here, the payment is in rupees. As a result, instead of giving the zero rate, if it is zero rate, you can claim the input credit. But in this case, when it is exempted, you can't claim the input credit. You can't claim the input credit. That is the difference between these two. Then the restaurants beyond the immigration counter of the airport, but I can't understand now, even in the previous, the existing law, this error, this weakness is there. They have recognized only the Bandaranaike International Airport as the international airport in Sri Lanka. At present, there are 3 airports, international airports are operating. Mattala, once away, but Palali Airport, daily it is in operation, but I don't think there are restaurants beyond the immigration counter. That may be the reason why they have not included those 2 here. Right. Anyway, it's continuing. Then, these diplomatic privileges, the people who are enjoying the diplomatic privileges, if we are supplying any goods or services to them, continue to be exempted from VAT. Then the supply of locally manufactured goods supplying to duty-free shops. Because duty-free shops, they are selling, we assume that those sales are export-like. As a result, this supply made exempted, but not zero rate. That is not zero rate. It is considered as exempted. That means you can't claim the input credit. Then continuation, the certain fund, the projects financed through funding, overseas funding, those are continued to be exempted. Then financial services are also continuing. The exemption is continuing. In that, mainly all type of financial services, including hire purchase and lease, the finance lease are also included in this exempted category. Now we will move to next item. Life insurance and agraha insurance and crop and livestock insurance continue to be exempted. Then non-performing loan cancellation, writing back of non-performing loans continue to be exempted. Then all healthcare services continuing to be exempted. Then articles imported subject to special commodity levy. If the special commodity levy is there, there won't be VAT levy on that. It continuing. Now this red color one, they proposed in the bill, but didn't legalize. Tower hall theatre foundation related things, then the sea sand sailing, then the local manufactured handloom textile continue to be exempt. The unprocessed agricultural, horticultural and fishery products, the poultry is not there. Unprocessed agricultural, horticultural, fishery, fishing produce are exempted from VAT, continue to be exempted from VAT. Now here, what is the measurement on unprocessed agricultural, that we have to carefully handle that. Anyway, as far as they do any processing, they consider it as a process. Right. Then next, this certain manufacturer, the Sri Lanka tea board, identified by Sri Lanka tea board, certain these tea industry machineries, they wanted to make exempted, but that didn't work out. Locally manufactured surgical gloves continue to be exempted. Then fabric which are subject to cess for handloom, now the certain fabric are continued to be exempted. Then export development fund project things, they wanted to exempt, but that didn't work out. Then services which result and improvement of the quality, character of any yarn, fabric with related to garment industry continue to be exempted. Then geriatric services and child care, these elderly people and child care things, now it is continued to be exempted. Then the international telecommunication services, they wanted to make exempted, but that didn't work out. Then continuation, goods and services for project identified strategic development projects. When we supply any goods to strategic development projects and services to them, those continue to be exempted. Then goods or services to any specified projects, that is with the approval of the minister, those supply of those things to those projects, goods and services to those projects continue to be exempted. Next one, goods and services to any infrastructure development project, those are also continue to be exempted. Then services by central bank continue to be exempted. Then certain services of public corporation, certain identified services of public corporation are continued to be exempted. Then some import related things which are continuing. Passenger baggages, even at present, the passenger baggages are exempted from VAT, that continue to be exempted. Then when you import anything for a temporary usage, for an exemption, for an exhibition or a technical demonstration, for the purpose of re-export, you bring those things for a temporary usage in Sri Lanka, then those are continue to be exempted. Continue to be exempted. Then aircraft engine and aircraft spare parts continue to be exempt. Chemical naphtha by CEB, Petroleum Corporation, for the purpose of CEB, will continue to exempt. Then the bill wanted to continue to grant exemption on motor vehicles which are subject to special excise duty. Special excise duty. But that didn't work out. Now we'll see the repercussion on this. Right? Then next item, local supply of any goods which would have been imported on importation, it is liable for VAT, exempted from VAT. When that particular item, when we are importing, if it is exempted from VAT, when we, the locally manufacture and supply, that also should be exempted, but that also didn't work out, not legalized. Now we'll see the newly added things. We'll see newly added things. Import or supply of pharmaceutical products, drugs and all, their wordings are totally changed. Now changes to the exemption list, updated, these are updated, these wordings are updated. Pharmaceutical products and drugs are exempted from VAT. Then Ayurvedic preparations are exempted from VAT. But only thing we have to be very careful about this change of the connected words in these things. Then crude petroleum oil, kerosene, liquid petroleum gas, aviation fuel, oil for ships, and fuel oil. These are continue to be exempted. Now, crude petroleum oil is exempted, kerosene exempted, liquid petroleum gas exempted, aviation fuel, then oil for ships or fuel oil exempted, continue to be exempted. Now they wanted to keep this agricultural tax exemption, that also didn't work out. Then import and supply of yarn used for textile industry continued to be exempted. Then dye for handloom industry continued to be exempted. Then updated exemptions, supply of educational services, the wordings they have changed, but anyway, it's continued to be exempted. Services by Department of Commerce, BOI and Sports Authority, those services continue to be exempted. Then rice and rice flour and bread continue to be exempted. Then next, import of goods to a mission. This is diplomatic privilege missions. Those are exempted. Goods from any foreign organization or out of the funds from such organization receiving of funds. On that, the import of goods are totally continue to be exempted. These wordings they have modified. Next, we'll see import of goods for the specified project identified by the minister. These are specified projects, only thing minister should identify it. Then goods for a project identified as strategic development project, when we supply, that is also continue to be exempted with modified wordings. Goods for infrastructure development project funded through foreign loans or donations continue to be exempted. Then, now those are the exemptions. Those are the exemptions given in the new exemption schedule effective from 1st January 2024. Now, we'll see, in addition to these things which are already legalized, as I mentioned on 14th December 23, they published a new bill to cover two main items. One is VAT rate increase from 15 to 18%, because this is already legalized by way of a gazette notification. But they wanted to bring this into the main act, because in the main act, there are some connections with these rates. Therefore, now they are bringing that legislated rate increase into the main act. For that, they are proposing a new amendment act. Right. We have to wait until they legislate it. The second thing is the VAT registration threshold reduction from 80 million a year to 60 million a year. Once it is legislated, normally a thing like this, even they have mentioned that it is to be effective from 1st January, it is not practical, because nobody, the government can't backdate a registration requirement. They can't backdate. Therefore, most probably, I feel that this will get legalized with effect from, most probably, maybe from 1st of April. Then, SWAT related thing, anyway, SWAT system will continue. SWAT system will continue until they find a better system than SWAT. As I mentioned, the SWAT issue is not in the system, it is more towards the administration. Right. Those are the things what I have to highlight with relate to the introduction of the new amendment act and the expected the bill which is to be passed in the parliament in future. Thank you.
Thank you, Mr. Atula. Mr. Atula, now, thank you very much for that detailed presentation. I have seen that there are some questions that have come in the Q&A. So if you have time, even during our panel discussion, please feel free to answer those questions. And also, before moving into the panel discussion, I would like to ask from you. Now, you have mentioned some of these changes which are legalized and to be legalized. And what practical difficulties would be there in implementing these changes?
Okay, yeah. And now to support that, actually, I have listed certain questions, certain practical issues in my presentation after this slide. Yeah, I'll open that. Yeah. Now I'll run through these things. Now, these are my personal thoughts. Now, definitely we have a panel, good panel, representing all sectors. They, in future, they will give their views on these things. First, I'll give my views on few items which I have highlighted. Now, provision of staff meals and transport services. Now, these staff meals and transport services were exempted from tax as per the existing law. Up to 31st December, this clause is there. The supply of free or subsidized meal by an employer to his employee at their places of work and transport free or at subsidized rate by an employer to employees using a motor coach between the place of residence to the workplace. This item is there in the exempted schedule, which is valid only up to 31st December. Now, thereafter, this won't be there. Now, what is the repercussion? Now majority of these garment factories and some other factories, they are providing meals to their employees. Then the person who is providing the meal charge VAT to that particular company. Now, then company claimed the input VAT on that. Right? They were claiming the input VAT. But there was an issue. Now, this item, now it is not, this exemption is not there in the law now. Exemption is not there in the law. Now, when they remove the exemption, when a company supplying free meals to employees or transport facilities from resident to the office and back to the residence, those services, you have to give market value for those services. You have to give market value for those services, and on those market values, that particular company should pay VAT. That means now they can claim the input VAT, no problem. The input VAT, what they are paying to the catering people, the canteen management people, the company can claim the input VAT, but output, even we are not taking a value. Now, in this case, we have to take the market value for these foods. Easily we can get it because we have an invoice from the supplier. Then on that value, we have to take that value as a supply value and pay VAT on that to the government. Now, there are two issues on this. One is, for this supply, there's no commercial invoice or tax invoice. Definitely no tax invoice, no commercial invoice even. But having an investment is not the most important thing. The important thing is whether it is liable supply or not. When it is a liable supply, you have to take the market value and pay VAT to the government. Second thing, in most of these canteens, where the company also provide various facilities such as gas, electricity, equipment and all. Then suppose you are getting a lunch parcel at the rate of 200 rupees. Then the supplier charge 200 plus 18%, that is 236 rupees. But when you supply that to the employee, the 200 plus VAT won't be the reasonable price. You have to load your supply values, other supply values also into the price. Then the 200 rupees might go up to 250 rupees plus VAT. Therefore, there's a big effect of the VAT on that. Right. That is one thing. Now, then motorway, now even the transports, same thing is happening. Now, VAT chargeability on motor vehicles. Now, chargeability on motor vehicles is another issue. Now, as per our existing law, motor vehicles are not liable to VAT. Instead of that, there's a special excise duty on that. Special excise duty under the Excise Special Provisions Duty, the Special Provisions Act. That's a consolidated tax. Now, for them to introduce this consolidated tax, they removed the VAT at that time. Now they are cancelling this exemption. Once they cancel the exemption, these vehicles made liable to VAT. Ultimately, what will happen if they will not cancel this consolidated tax called excise duty under the Excise Special Provisions Act? That's duplicate of tax, because they have to, the vehicle importers should pay this tax as well as the normal VAT. That's the issue. Then the wholesale and retail trade, there may be certain issues. Definitely these industrialists and specialists will talk on these matters, but these are the things what I feel. Now, especially the trading activities. Now, in the case of trading activity, a lot of exempted items now becoming liable. Now, in your stores, especially in supermarket and all, there are so many exempted items. Now, whatever the exempted items held as at 31st, holding as at 31st December 2023, when you sell it after that date, you are supposed to pay VAT at the rate of 18%. Who is going to bear this 18% on that? Definitely what will happen, practically what's happening in the market, all these supermarkets, definitely they can't bear 18%. Then they will influence the supplier to give us special discount on stocks. That means ultimately, the manufacturers and suppliers to the supermarket may have to bear the cost of that 18% VAT on not only the stock in their hand, but also the stock what they have already sold to the supermarket. Because supermarket business, they can't cancel the supermarket business. They have to continue with that. Then they may have to agree to bear that cost. That will be a big issue to our small level manufacturers and suppliers. Then I have another issue, charging of VAT on capital expenditure of renewable energy sources. Now, generally, now if we'll take a solar project, per 1 megawatt, nowadays 1 megawatt will cost about 0.8 million US dollars. 0.8 million US dollars will cost 1 megawatt of solar project average. Now, then earlier 0.8. Now what will happen? That will increase by 18%. Then once we add 18%, almost about 0.95. That means there's a huge capital expenditure increase. Now, when the capital expenditure requirement increases, what will happen to these investors? Majority of the overseas investors, they will reluctant to come and invest in Sri Lanka. Then what will happen? This renewable energy generation will come down in Sri Lanka, will not increase in Sri Lanka. Solar, hydro, wind power, and for everything, all this renewable energy sector, that this will badly affect. Now, if we'll take hydro, the per megawatt, the cost may be about 1.5 million or more. 1.5 million or more. Then 18% of that is a huge amount. Therefore, the investors will discourage. Once we discourage the investors, the renewable energy producing will come down. As a result, Sri Lanka has to continue to import petroleum products from overseas. Then then VAT on petrol and diesel. Now, VAT on petrol and diesel, with this, it will badly affect to the cost of living of the people in Sri Lanka. Now, bus fare will go up. The electricity bill, once the rain season is over, definitely they have to increase the electricity bill for them to cover up their cost. With that situation, we can expect not 3% increase. Real market effect may be more than 3%. The cost of living will go up more than 3%. 3%, the VAT increase plus cancellation of that exemption, there's an increase. Market real effect may be 3 to 5%. Right. Saying that, I would like to hand over the thing to Ms. Thing. Then we'll continue with the panel discussion. Thank you.
Thank you, Mr. Athura. Mr. Athura, now I will come back to you in a while. In the meantime, if you can take some time to answer these questions which have come under Q&A, I greatly appreciate. And also, I would request the audience to send your questions if you have any questions or clarifications that you need to get clarified from our panelists. Please send your questions under Q&A. So now I will briefly introduce our panelists. We have 6 eminent panelists here. We have Mr. Gajendran, N.R. Gajendran, Senior Partner, Gajman Company. Mr. Suresh Perra, another practitioner, Principal Tax and Regulatory from KPMG. Mr. Jahan Perimpanayagam, Chairman Slascom and CEO of Informat Private Limited, a John Keel's Group company. Then we have Dr. Rajapaksha, Emeritus Managing Director, DSI Group. Rohan Vijay Group Financial Controller of Dialog Axiata, and Professor Anil Fernando, who needs no introduction. So now, to start the panel discussion, I would like to pose this question to our 2 practitioners. I would like to ask this question from Mr. Gajendran and also from Mr. Suresh Perra. What do you think, now going by what Mr. Athura has mentioned, do you think that the removal of certain exemptions and also increase of the VAT rate from 15 to 18%, how will this affect the society, business, and the economy? And also, do you think the government will be able to achieve revenue targets? I would like to start with Mr. Gajendran.
Yeah, thank you, Ruchira, for the question. Ruchira, now this is what's the debate that is going on, because first of all, there is a lot of confusion arising even in the press media. They have been saying so many items. One media said item exemptions are reduced by 90 items. Another one says exemptions are reduced to 90 items. And also the electricity was a question whether they will impose that. Even Parliament also, they were saying they are going to impose on electricity, but as it is, it has not come in. The threshold increments have gone up. It is not coming. Basically, they are trying to raise 720 billion revenue on increase in VAT from 23 to 24. This increase is expected to come in 3 forms. One is the exempt items are going off the list and it will become liable. So there can be straight hit of 18% there. Then there is this 3% increase. The rate is going up from 15 to 18%, which are already liable. Then other one is, though there are items continue to being exempt, the exemption list has been varied even from the bill to the act. So there can be narrowing of the exemptions. Apart from that, all input costs, input taxes like capital taxes and all is going to push up the cost. I think this is the time for Lakshman and his institute to pull up their socks. Costing has to be going to become a major issue. If you miscalculate your costing, you can underprice and also you can also overprice. I have come across, even before the changes, when the costs are rising, input costs, even places like restaurants, which are not so very well organized places, their price revisions take time to hit the price list the food they are serving, food and beverage they are serving. In the process, they are incurring losses without their knowledge, and sometimes it's a little too late to recoup these losses, and they start borrowing small entities. That is because they don't have maybe CMA accountants. I think Lakshman didn't teach us at the institute chartered accountant. They don't know costing, one of the two, you know. So there is a lot of issues arising out of this. So if you just monetize the 18%, 720 billion revenue, is going to be about 4 trillion. That is only if you take, but there will be much more than that. Base is going to be affected by either increase in the VAT or the exemption being removed or the costs going up on the exempt items. And also basically there are restriction on input tax claims. With the high rate of VAT, we must have a more pure system of VAT than we are having a modified system. Our system is not pure, really, it's a modified VAT because all input taxes cannot be claimed if you are in business. There are restrictions on traveling and things like that. And when you can claim the invoices, and you have to claim within 1 year and all those things. And there is a lot of effort to deny the claims. And also these tax invoices issues, if you don't issue the invoices properly, input tax will be disallowed, and all those matters are there. So this will have far-reaching consequences because there will be large-scale evasion also. People will say the prices are going up because of that, but they are not formally operating. They will not pay the taxes. There is going to be, because the question is now that there have been people who have spoken to the professionals saying that, look here, I have to pay this tax, but actually I don't have the money to pay. So if you go to borrow, there is no one to give you money to borrow. The banks are not going to give. The question is whether the government will reach the revenue what they're expecting. We have never reached our budgeted amounts in revenue. For example, 23 take, we had originally the revenue budgeted was in the 22 budget for 23 was about 3.6. If you go to the estimates and see the 3.6, that was brought down to 3.4, and we are going to end up at 2.8. So 2.8, we are going to go up to 4.41, and out of this VAT, it is reported, it was in the papers also, about 700 or 720 billion. So if the government, going by the past record, that they don't raise this revenue, people are suffering because the costs have gone up. Businesses are incurring because they don't get the costing right? And also the supply chain issues are there, demands are going to go. Who is benefiting out of this program? And I'm sure the IMF also is going to be troubled when we don't reach these revenue numbers. So you have to see, I think, in if you look at the Laffer principle, I think we have crossed the Rubicon point, gone beyond the point of return. You can't increase, then you try to increase, you remove all the threshold, remove all the exemptions. You think you're going to get revenue. You won't get the revenue. People can't pay the money like that. The principle of capacity to pay is very important. And when you do consumption taxes and when you tax essential item, it completely destroys the principle of capacity to pay. They can't pay the taxes. So this is going to have the people have not got the grasp of it. It is January, February, March, you will see the story. Prices will go up. Prices will go up. They will say it's VAT. And the monies won't come in, and people won't be able to buy those goods, and they have to restructure, or they have to go for optional purchases. People have said, if you go to the villages, they are saying, they are openly saying that they have only 2 meals because they can't afford to have 2 meals, especially the elders. So my question here, I'm wondering who is going to benefit out of the whole process. People are not going to, they are going to, it's becoming unbearable. companies will get shunned away because the SMEs are already basically out of business, and more companies will go into it. Maybe a few large corporates will benefit because the business will getting concentrated on that. And even the businesses, the SMEs, which is over 50% of the economy, they may not get the pricing right. I think, Lakshman, you have to do some marketing of your CMA institute. I don't think the public knows that there is something like this there. It's there. It is very important. It's timely calculation of the cost, because you can't, first of all, the fact should be there. You know, they must have all the facts, and then you must have the technological and human resource know how to calculate it. And then you have to make a considered decision in pricing. You know, if you don't get the costing right, the pricing is going to vary. And this is going to vary on a daily basis. This costing is going to change on a daily basis. They will, on the run, they can bring electricity into VAT. You never know what they can do. They can bring another threshold reduction. Of course, they are not going to wait till April to bring this 60 million reduction from 80 million. I believe the first reading is on the 19th of January, and they will enact it before January. Otherwise, they will lose 1 quarter revenue, which they may not want to do that. So basically, we will have to wait and see how things develop. And it's not going to, prognosis is not going to be so rosy. Importantly, as Lakshman said, that the cost side, they are not looking at it. The government costing, they are not looking at it. If you see the cost from 5.2 trillion, it's going to 7 trillion in next year. So basically, the total cost is far in excess of the increase in revenue, which you will not get also. The debt stock, the debt repayment, the gross financing need is going up from 5 trillion in 2023 to 7.35 trillion in 2024. So we are still living beyond a beat. I think, as Lakshman said, you have to slash this expenditure whether you like it or not. They are saying interest costs have gone up by $500 billion. They say that salary costs you can't cut. There will come a time where they will not be able to meet the cost. You know, this revenue can't hit these numbers. You can't meet the cost. And now the new problem we have is you can't print money. You can't print money. And if you don't get foreign borrowings the way we want to get, and if we can't generate the income, then we have to go for local borrowings. Local borrowings, and if the people stop lending to the government in the form of bills and bonds, then the interest rates will go up. You know, so there can be a spiral effect or a circular effect on the decisions what we are making. The sad part is whether this has been done scientifically. I don't think so. It is being done maybe to satisfy the IMF. They may be happy that it is there. But when you go for the next rounds of evaluation on all these things, it's every tranche will be evaluated before they release. We have got only 2. So when we go, we will not be able to hit the numbers. So this someone has to, and also accountability has to come in. If you don't, you are troubling the people, and if you don't achieve the numbers, who is accountable for this? Nothing happened in government. If you fail, you may get promoted. Thank you, Ruchira.
Thank you, Mr. Gajendra. Suresh, I would like to know your views on this.
Yes, initially, I think there are so many changes happening from January, and I think Mr. Ranavira took us through the changes. And there I would like to add, as he pointed out, okay, there are certain changes that though we expect, or though there's a reference to implementation from 1st of January. I'm specifically referring to the threshold reduction, where he expected, okay, that will happen from 1st of April. But at the same time, I hear so many things in relation to this, and sometimes the possibility is that yes, the threshold reduction to 60 million may happen from 1st of January. That is what I hear, because the thinking is that this is the tax. It's a quarterly tax. Basically, quarterly you have to make a payment. on that basis, they are expecting it to make it retrospective and to pass the law in the middle of the January. So not only that, even in relation to the, so here we have been discussing about the VAT in relation to the social security contribution levy also. My understanding is there is a possibility that same process will be followed. Middle of January, the both amendments will be passed with retrospective effect. But in other words, the threshold reduction, SFCL from 120 to 60, as well as in case of VAT from 80 to 60, may happen from 1st of January. So will there be court cases involving this and all that? I think they are considering, but at the same time, there's a possibility that happens. So I just want to keep the viewers to keep your fingers crossed and be ready for that eventuality as well. Right. So how do we, and also as Mr. Kajendran pointed out, this is the time for the accountant to get their act together and do the number crunching and do the costing. And let me give one tip basically. Now, so many exemptions are being removed and they're going to be live. So when you are going to calculate the price of these products and services from 1st of January, how are you going to do this? In relation to most of these exemptions being removed, where it's going to be liable from 1st Jan, you will find during the initial period there will not be enough input to claim. So as you know, basically as to how the VAT is to be calculated, output VAT minus the input VAT, and that's the it's a difference between the two that you are giving to the Commissioner General, and it is taking into consideration the input VAT factor also important when you're calculating the ultimate product price. So what I'm trying to indicate here is during the first month, first taxable period, you may not have enough input VAT because you won't have the VAT invoices to claim the receipt during the period. So you may have a scenario when you're doing the number crunching, the pricing. If you are to maintain a particular margin during the first periods, you may have to look at a different price, and once the inputs start building up, you may find your cost base going down a little bit compared to the initial period. So you may have to sometimes you may have the opportunity of bringing down the prices of the products and services thereafter with the time. So normally my understanding is once the prices are set, prices don't come down. So but please do have a look at that number crunching also, because you can see two stages with regard to this costing process. And right, so in addition to that, be mindful with regard to the concept of the time of supply. What are the supplies that will go at 15%? What are the supplies that will go at 18%? Again, there are no transitional provisions, but the time of supply gives the rules at Section 4 of the VAT Act with regard to time of supply will have to be considered in deciding with regard to these transitional supplies, what is the rate to be applied. For instance, let's say 10th of December, you placed an order and you made an advance on the, let's say, 15th of December, and the delivery of that product or the service or the performance of service happens, let's say, 25th of December, and the invoice for that was raised on the 5th of January. The payment happened on the, let's say, 15th of January. Now, depending on whether you're on cash basis or accrual basis, what is the rate to be applied for that particular transaction? That what you call the transactions that let me call those transitional transactions. The VAT should be levied at 15% or 18%. So that's another issue that as accountants you all have to consider. And in addition to that, right. So speaking broadly, so what do we see in this change? Now, if I go to theory, VAT to apply to function properly in a country, in a jurisdiction, there should not be VAT exemptions, too many VAT exemptions. So If you look at good countries like New Zealand, Singapore, you can see the VAT number of VAT exemptions are less than 5. But in Sri Lanka, there are different ways of calculating. Large number of exemptions are there, and therefore, how VAT function in Sri Lanka is absolutely, how say, it's distorted. The VAT system in Sri Lanka is distorted. It's actually not doing its, it's not achieving its object. What is the object of VAT? To calculate tax only on the value addition. But the way it is working in Sri Lanka, due to large sectors that have been outside the VAT net, one could say that it was not functioning the way it should have been functioning. So historically, we had a problem because of the every budget you can see VAT exemptions have been introduced. In the VAT literature, this is referred to as the exemption creep. So every budget during the last so many years, people go and lobby, and somehow they become successful, and that is how the number of VAT exemptions had built into the VAT Act. So theoretically, it is wrong. But now what is happening is there's a rectification that is taking place, but the rectification is taking place at the wrong time. So from a VAT practitioner, I would say elimination of the VAT is the correct thing, but it is happening at the wrong time. We all know what the times are like in Sri Lanka. Now, this is so based on theory, okay, VAT exemptions are not good, therefore we are taking out. This is also the same theory that we heard 3 years back or 2 years back with regard to the fertilizer sector. Chemical fertilizer is not good, organic fertilizer is good. That's change that we try to do caused a lot of damage to the Sri Lankan economy. So here also, though I'm 100% in agreement with the elimination of the VAT exemptions to, how do I say, for VAT to work, but then taking into consideration this country situation, the society situation, this may be the wrong time to do that, or and the wrong way to do that. So it's basically, if you're doing something of this nature, you need to plan carefully and do it gradually, not overnight. There's something that Mr. Gajendran pointed out. What is going to happen now is there is going to be huge increase in the goods and services at the marketplace. Right? It will come not just because of this VAT changes now, not because costing points out, okay, this is the price at which that you should be selling. Now what is going to happen is the traders are going to blame the government and say VAT, 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 but at the same time make a secret profit. This is what is called the profiteering. Naturally, people will start, when they get an opportunity to make a super profit, they are going to gain this opportunity. So you will find boards when you reach the, when you go to the shops or the service centers, saying that due to what the new price is this, but at the same time in that new price, there will be the profiteering aspect also, because nobody is going to sit and calculate properly. So this is a good opportunity for the traders to get a good margin also here. But having said that thing, whether that will kill the entire market, again, the point that Mr. Gajendran pointed out, whether this entire thing will have adverse repercussions and whether this will create the, how to say, upset the entire system in Sri Lanka is something that we have to keep our fingers crossed and see, and how are the people going to consume from the point of the consumers, whether they can bear this. And if the consumption is not going to happen, whether suppliers will be able to remain in the market, continue to trade in the market, that is also something that we have to keep fingers crossed to see. Yeah, so I think those are some of the things that we have to be mindful there. Right, so I think again, that's another point I want to make up. That is again in relation to the we are eliminating all the exemptions on the basis the VAT should be the VAT mechanism should be rectified. There is something else that we have to keep in mind at the point of importation for essential goods. We do have special commodity levy, which again is violating the destination principle in the VAT, because for SCL, you can't claim input VAT. So that breaks the input claiming at the point of the, at the origin of the supply chain itself. So that is again, from theoretical point, yes, it's a time to abolish the social security contribution, yes, abolish the special commodity levy and bring the essential goods within the VAT net. So the VAT input could be claimed by the relevant parties. Having said that, I should also point out and now see areas like motor vehicles, telecom. Now we have seen from time to time in the history to consolidate the tax applicable to those two industries. In case of motor vehicles, special excise duty, and in case of telecom levy was introduced to say these industries will be subject to just single tax. And now what we are experiencing, consolidation happened, and thereafter on top of the consolidation, again the VAT is coming. So again, the price distortion, I'm sure there are telecom industry people here to say that about this history, to point out those things also. So those are things that we have to keep in mind.
Thank you, Suresh. Thank you very much. I think you hit the nail on the head. Yeah, we all agree that VAT system should be simplified and there's certain exemptions which should be removed. But as you have correctly mentioned, are we at the right time to introduce these changes? So now I would like to move into specific sectors, starting with Professor Anil Fernando. Sir, this is the question that I want to ask from you. Now, if you take the higher education sector and if you take the undergraduates which are coming from different parts of the country to the university system, how will this affect the cost of living and how will this affect the society? And as a lecturer and also as someone who's closely working with the higher education sector, tell me what novel methods are there to increase revenue without hurting people so much? Sir, you're muted. You're muted.
Hello, and am I audible enough now?
Yes, yes. Now I can hear you.
Yeah, thank you, Ruchira. So before the commenting on the specifically how this would affect to the higher education and the education sector, you have to first understand the present context on which this VAT was imposed. Like if you try to understand in isolation, so it's in and out. Sometimes that might lead to misleading the conclusion. So at the present context, of course, the government is in a juncture to increase its revenue, as IMF has given certain the guideline and targets to comply with its revenue-based fiscal management. So whereby to increase the government revenue. So the more lubricant, like efficient way of increasing the government the revenue is to expand the economy, increase the GDP, and whereby you can think of different ways of. But here, so you face an economic context where the economy is contracting, GDP is having a negative growth. So instead of going on a kind of scientific basis or in a rational basis, how best government revenue could be increased, the government has to step on to collect revenue and increase revenue in a very convenient and easy way. So that is the biggest problem. That is why in 2024, the increase in VAT so reported to be more than 100% and amounting to 1,400 billion. So we have to understand this the context and the premise before talking about the other. So coming to the education sector, of course, in the exemption list, it says the provision of educational services by persons or partnerships are exempt. So therefore, it looks to be like education sector has been removed from these things, or sector would not be affected. But if you go into the details, so what is really meant by an education sector and what components would add to the cost of education sector, lots of areas are taxed. For instance, directly the education, the knowledge, the skills and attitudes. So books, magazine, journals. So just few items. I'm not going to explain in detail, just to point out the item that we need as major inputs, and even the public library services. So education doesn't happen in one place, even in a university, because so you need to be exposed to many avenues and gain the knowledge. But so you are applicable for tax, even research and development, the software, IT and enable services. Even nowadays, just moving away from the traditional teaching learning method, students learn through online platforms, Zooms, and even the mobile phones and other devices. So they are subject to be new VAT at 18%. So therefore, it is pretty obvious from cost factors, it is not that easy, no matter whether it is a public sector institution or private sector institution, the cost of producing a particular product in the education system is going to increase. But so how best, like education is really essential and it is a common good. But other than that, there are other essential things that the people have to fulfill. So with this context, would it be possible for people to afford for those things? It's not. So their disposable income will drastically go down. As a result, purchasing power, the capacity will also go down. At the initial point of, so the capacity to buy goods and services that the society or the economy would produce would go down. Indirectly, this will have a spillover impact on the long-term contraction of economy as well. So some may argue, on the other hand, how is it connected to inflation? When we look at this 18% and the cost of production increases and all those things, it is likely that the inflation will also go up. But on the other hand, it could be argued that no, so the reduction in the purchasing power may reduce the inflation. So inflation is contributed not only by the demand pull aspects, but the cost of production. So that is one of the major areas. So apart from that, the price gouging is also there. But as far as this VAT implementation is concerned, to great extent, cost of production will increase. As a result, inflation also will go up. So this has a counter productive impact as a society in the long run. What I feel like it is not good for the country, even in order to face this current situation. You may create lots of issues, not only from economic point of view, from social point of view as well. That might lead to uncontrollable even public unrest. If you take the university system, now we know that the students, not only the students, even the faculty members, professionals and all, so they are in a very contentious situation and hard to further find the means. So the cost goes up, and as a result, there is a tendency within the university system. So it has been explained in many public platforms. The professional and including university professors, lecturers are leaving the country. So that would lead to brain drain. It is also really big negative impacts. You know that producing professionals will not happen overnight. It will take longer period of time. So as a result, at this particular juncture, people are leaving the country, and that might have negative impacts in terms of many the situation. So as far as the situation is concerned, we would face a kind of a gloomy economy in the near future, with distracted economy with less purchasing power. The consequences, like the apparent consequences, are seen, but there may be many more other consequences that we may not be able to predict. So therefore, this is the right time for us to discuss and bring about these issues to public platforms and discuss and find new ways and means of dealing with the government revenue rather than passing the entire burden on the ultimate consumer. Here in the case of VAT, the entire burden is borne by the ultimate consumer. Of course, we can take lots of measures even within IRD. The inefficiencies, even some corruption, when we talk about corruption, so that goes to the politicians, but within IRD also, lots of things can be done. Even transparency, fiscal transparency can be implemented to some extent by introducing a technology and improving their capacity to collect tax in an efficient way and improve the administration. So likewise, we need to find a collective and collaborative the path to address this issue. Otherwise, that might create, how to say, negative, many negative impacts we may not be able to even predict.
Thank you, sir. Now, one more thing on that. Now, you have mentioned that we need to increase the tax net and we need to improve the tax collection methods. Now, I would like to know from you, are there any other novel methods that we can implement here without directly increasing taxes, be it VAT or any other tax, without directly increasing taxes? What are the novel methods that we can employ in order to increase government revenue and to meet IMF targets?
As far as the government revenue is concerned, so technically and theoretically, there are other means of just collecting revenue. But as being Sri Lanka, so we don't have any other, we don't have many options other than the tax revenue. But the tax revenue, we can change the structure. So direct, indirect, the structure is too much like, so indirect taxes is almost 82%. This has to be changed. We need to focus on maybe high net worth individuals and income rather than looking at too much on the consumption of goods and services. And if you can remove the inefficiencies, even the tax collection process, by introduction and integration of technology, to great extent we can reduce it. And on the other hand, like there are discussions about the expenses as well, government expenditure. Then direct, eyes go, okay, how best we can reduce expenses. Like it is not the right way. Actually, we have to reduce the government expenses. So there are essential and must expenses where the government is supposed to do all those things in order to provide the public goods and services, to maintain law and order, and there are certain things the government is expected to do. So these are must. But we know that there are so much unnecessary expenses, mainly due to corruption, wastage, and frauds. If you can stop these things for the time being, because everything depends on how genuine the government is, whether the government is free of corruption, and whether the government does not allow the corruption to happen in the other areas. So whereby you can reduce the cost, and on the other hand, we have to think of a vibrant way of increasing the taxes. And increasing the tax base is also another area, and especially when it comes to these IT-related industries and sectors where revenue is generated and income is generated without being taxed. So whereby tax base has to be increased, that is also one, basically from the short term. But in the longer run, these short-term measures may not address. Longer run, of course, you need to increase your production and the GDP, and the tax revenue has to be increased. For example, if you take, there is another conundrum. If you take the tax statistics of Sri Lanka last 2 decades, it is decreasing. Our tax revenue as a percentage of GDP, which was around 20% somewhere. Now it has gone down even less than 10%. That is not adequate. If you take the global statistic, you cannot say that this is the benchmark, but average benchmark, at least if you do not have 15% of the government revenue as a percentage of GDP, so government would not be able to function efficiently and effectively. So if you think of these, increasing the tax base and changing the tax structure, introduction of technology, and the reduction of unnecessary costs and all those things through a very good fiscal transparency mechanism geared by technology might find a solution. But all about, we need to have a kind of a governing system which is corrupt-free.
Thank you, sir. Thank you very much for your views. Now, moving into technology, I would like to know views of Mr. Jahan Perimpanayagam, who is the chairman of SLASCOM and also CEO of Informed, group of a company belonging to one of the largest groups of Sri Lanka. Jahan, now tell me, how this will impact on the IT sector and also on other services such as BPO industry, tourism, SAGT, and port operations. And also, as a person who's coming from a corporate background, tell me how this will affect the migration of employees, exodus of employees.
Thank you, Ruchira, and thanks to CMA, which has always, on a timely basis, taken up matters of national importance. From a SLASCOM perspective, most of our members are exporters. So hence, VAT will not have a direct impact. The second aspect is the removal of exemption. Previously, IT BPM services, that was not applicable. So IT services were exempt. Now, IT services will attract VAT. Now, for those who have software and BPM services locally within Sri Lanka, they may, in fact, some of them may welcome this because previously they were not able to set off their input VAT, which now they will be able to. But will these dampen sales? Since most of our member companies have B2B services, the customers will be able to, which are companies, will be able to claim input VAT. So demand is unlikely to suffer. However, there are companies that service in the B2C space. Right? And now customers are going to see a significant and a steep rise in pricing. So they have expressed concerns, particularly as there isn't a level playing field for companies which are registered overseas, international global companies. This will not be applicable, whereas for companies registered locally, VAT will apply. So there will be a big discrepancy in pricing, which is of concern. I know this was discussed in Parliament as well. Some of the other speakers said cash flow will have an impact for our companies, particularly where they need to pay IRD on a particular fixed date. But if there are delays in collections, cash flows will be challenged. As several of the speakers already said, there will be a general increase in prices all around and general inflation, which will mean now the biggest cost factor for the IT BPM sector is obviously employee-related cost, staff cost. And that is going to see a knock-on impact. There will be demands for pay increases. Already this sector is badly impacted by migration. And we could definitely do with keeping inflation under check. So that is going to be a matter of concern. A lot of our employees are already in the top bracket, paying at 36%. And these skills are easily transferable internationally. In general, the VAT hike itself will push prices across the board and increase in inflation. Indirect impact, the VAT changes could also disrupt supply chains and dampen consumer spending. For businesses, lowering the VAT threshold and removing exemptions will add to the administrative burden for businesses, potentially increasing costs and slowing down economic activity. For consumers, reduced purchasing power, higher prices and potential slower wage growth, consumers will have less disposable income, impacting their spending and overall well-being. So this could impact some of our retail businesses. Now, specifically, I'm not an expert on all of the industries that John Keels represents, because the group is very diversified. Some specific instances in our retail sector where mobile phones are marketed by John Keels Office Automation, for instance, we have a partnership with Samsung. Phones which were previously exempt now will be subject to VAT, and there will be a steep rise in retail prices of phones and affordability. So this could see the rise in the grey market. For plantation sector, the exemption for tea producers is now removed. About 85% of the production is for export, so there will be little impact. But the balance, there will be significantly more paperwork, both for the companies and for the IRD. So the additional government revenue, whether it is worthwhile, is a moot point. For ports, the companies operating within the port sector, mainly involving businesses in operations facilitating international transportation, are categorized as zero rate for the purpose of VAT. Right? To facilitate input VAT claims of such companies, the government introduced a SVAT scheme, which has worked well, eliminating the need for refunds and ensuring favorable cash flows. However, with the proposed abolition of SVAT from 1st of January 2025, the industry will face significant delays in recovering refunds owing to them on the input VAT. So this will add additional burden to the companies due to administrative difficulties in processing. So these are some other sectors that will be impacted. A general point that I would like to strongly recommend is digitization. I think the president has laid out the vision for a digital economy. I think we must fast track the adoption across government. There is no reason why customs, for instance, that operated with zero paper, paperless during COVID should now ask for paper. We have already passed the Electronic Transactions Act. We must make sure that RAMIS system is fully optimized and used to its full potential. That will ensure that we widen the tax net. There is a good initiative to make it mandatory for have a TIN number to open new bank accounts and credit cards. I think that will also help in widening the tax net. And as a lot of the speakers said, we strongly advocate reducing government expenditure. There is, at this moment, there is absolutely no need for increases for things like emergency purchases that was talked about in the health sector. The shift to renewable energy must be accelerated. We have 350 days of sunshine. We must utilize some of the resources that we have at our disposal. So the IT/BPM industry strongly advocates for digital governance and also for the adoption of renewables. Thank you.
Thank you, Jan. Now, also, I would like to know from you, as someone who's coming from the corporate sector, now we know most of the employees are leaving, especially those who are working in companies. There's a tendency of them leaving. How this will affect? Do you think that this will increase the problem further?
So we saw a spike of migration and increase in attrition last year, and it had started to slow down. So we were optimistic that the worst of the problem was past, and there were in fact some people coming back to Sri Lanka, right, which we welcomed, because people must realize there are challenges all over, and today it's not just in Sri Lanka. I think a lot of so-called developed countries also have plethora of challenges and problems. So we thought the worst was past. How this is going to impact further on employees remains to be seen. We are concerned about general increase in costs overall, and that this could further encourage people to start looking out and looking options remains to be seen, which is concerning.
Thank you, Jan. Dr. Rajapaksa, now this question is for you, sir. Can you tell me the impact of this on the manufacturing industry, especially for export-related industries and also for the SME sector? How this will affect their cash flows? What will happen to the loans that they have taken? Basically, how they are going to make loan repayments and interest repayments amidst the increases in cost?
Thank you, Mr. Ruchira, for allowing me to speak a little bit with words. I will mention the ground situation first. Now, as far as our company is concerned, there are a plethora of suppliers, SME, who are supplying goods to our company on SME sector. Now, up till 31st December, they will invoice with 2% VAT. Now, those stocks, if you are going to sell after 1st of November, January, it will come under 3% VAT. So therefore, our input VAT and output VAT will not balance even with the value addition. So this is a serious situation even to the supermarkets. Mr. Atula Ranavira mentioned, now supermarkets will not take this burden. They will tell the suppliers, you have to pay this 3%. So now there's a serious tendency for the SME suppliers not to supply goods to supermarkets and even to our company, because they are worried that they will be compelled to pay 3% on the supply done earlier, because the stock that have been supplied earlier has not been sold. This is a very serious situation that we are facing. I think it is facing by the other supermarkets as well. Then other thing is, now everybody says that that can be recouped. You pay 3% and you recover 3%. But please understand that when you have the raw materials, to convert the raw materials to finished products, there's a gestation period of 3 months. So therefore, you tie up your finances of 3% to raw material until you invoice. So therefore, there's an increase in finance cost. Then other thing is now the threshold, that is the most dangerous thing that has taken place. Threshold has been brought down to 60 million. That means 5 million a month, which works out to 200,000 per day. I don't think there's any retail outlet that does sell less than 200,000 rupees today, because the rent itself for any company is about more than 50,000. So therefore, they can sustain by having a sale of 200,000 rupees. So therefore, they will have to increase the sale. So therefore, they will be in a serious difficulty. So what they will do is they will increase the prices, and ultimately the total sale will come down. So when the sale come down, the revenue they may get, but as far as manufacturers are concerned, the volumes will go down. Now, our company, we are more worried about more than the revenue, we are more worried about the volumes. Because for a company to run, we must have the volumes. The MOQs must be there. So that is one of the serious issues that we are facing now. Then other thing is, I think Professor Anil Fernando asked whether there are other ways and means of recovery in taxes. I would personally suggest that had they increased the VAT rate, that would have been much easier for the collection than VAT, because VAT increase has affected all the sectors. If we increase the VAT rate, WHT, then of course the collection is also easy, and that would have been, that will not burden the small timers. Now, right now, everybody, even the small pauper also has to pay the VAT because of that increase of commodity price. That will not happen. Then other thing is meal supplier. Now, the meal suppliers, I don't think many of them know about this meal supply matter. I don't know how it has been calculated, because most of the companies, even garment factories, they subsidize meals. They provide all the infrastructure, fridges and gas and everything they supply. So the cost is subsidized. So now we don't get a VAT bill at all from the suppliers. So now this is an additional cost to us. We have to value the meals at the market rate, and we don't get a bill. So we just pay on the payment. We have to pay. So we don't get a bill. We don't get anything. I do not understand how we are going to pay VAT on that, because having an official bill, we don't get an official bill, or even if you get an official bill, it will be for the amount that they supply. So that is well below the threshold. This is an issue that we may have to discuss and see how it can be made. Then they asked whether there are any other ways and means of increasing revenue without burdening the small timers. I just had the experience last week. When I lost my identity card, I went to the police station and I made an entry. So, so he has to write in Sinhalese about 2 pages, and when I asked for a certified copy, he says pay 30 rupees. After spending 1 hour in writing, I spent 30 rupees and collected the certified copy. I think there are similar areas where we are paying very much less than the actual cost. Even the highway charge, they have increased from 400 to 500 rupees after 10 years. Right? That is only 10% increase, 20% increase after 10 years. They should earn much more than that. So these are other ways and means of recovering the revenue without burdening the small timers. These are few things that I can mention. But whatever said and done, the purchasing power will definitely go down, because the buying power will definitely go down, and our factories and our manufacturers will definitely have a face of the revenue loss in production. Production we have reduced. That means the production reduction means definitely reduction of the employees. So which we are facing very seriously, that one, because marketing people, of course, are not affected because the revenue is there because of the increased prices. But we don't get the volumes. Because of the lack of volumes, the whole production level has to be brought down. So that means reduction of total employment. So that is going to be a serious effect. And I personally feel that, ultimately, if you check the revenue collection, there will not be such a big increase in the revenue collection, because normally the system adjusts itself to nullify the change. That has been an accepted rule. So that will happen. Thank you.
Thank you, sir. Thank you very much. Rohana, this question is for you. Now, as the Group Financial Controller of Dialog Telecom, tell me what changes are there relating to the telecom industry because of these amendments, and how they will impact the telecom industry as a whole, and also what will happen to the prices of mobile phones. Many people are expecting prices to go up. So what do you think? What will happen to the prices of mobile phones, and also the general impact to the telecom industry?
Thank you, Ruchira and CMA for organizing this. To start with your first question, Ruchira, what are the changes that are specifically applicable for the telco industry? There are three main changes. One is the rate change, which is applicable across, including telco industry. And the other one is exclusion of the exemption of mobile phones, which is directly affecting the telco industry in two ways. One is obviously most telcos are into selling mobiles as well. So the sale of mobile phone or rather revenue will come down. And also these mobile devices are the primary access devices for connectivity services of telco connectivity services. Because of the price increase of mobile phones, there will be a reduction in smartphone penetration in the country, which would have a significant impact on the data consumption and revenues. The other change is basically the service provided by international EGO operation to local operators. This again have a direct impact in the telecom industry. In addition to the indirect impact which will have in the industry is overall inflation due to increase in production cost and transportation cost and all the other product and services cost. With this increase and exemption of or removal of exemption will have direct impact in the cost base. So let's look at how this would kind of translate into the industry and companies' operation or results or bottom lines. VAT is generally a pass-through tax. Finally, it's borne by the consumer, right? But not the entities, because they have a way of either claiming the input VAT or passing the output VAT to the consumer. But what will happen is the consumer will have to pay it by way of increase in the prices. And with the increase in the prices and the inflationary effect, the affordable income of the consumers would come down, their purchasing power would come down, and that will have a significant impact on the demand contraction. That on one side, there will be a reduction in demand for companies that will have a significant impact telco as well. On the other side, there is an increase in cost because of the inflation. So, which result in reduction in margins, profitability, and cash flows. Telcos, are companies which are heavily dependent on investment into infrastructure, very capex oriented industry. So when you have a situation of low profitability and cash flows, there is a concern over the affordability for future investment for companies, right? So if the returns are not there, even investors would not be willing to put more investment or FDIs into the industry because they are also concerned. So mainly this would affect the smaller players because their existence itself will be challenged because of this. So you see, we are in the digital age, and government is talking about digital economy, but to see this sector, which is providing primary connectivity to boost this digital economy, is significantly affected. So what will happen is, if the consumers are facing challenges to access connectivity services, either by way of affordability by consumers or by way of telcos not being able to put adequate investment into the infrastructure, so them not being able to access that level of quality of service or to the new technology, would have a significant impact overall into the consumer and the economy. You see, the telco sector is one of the sectors would have a significant taxes in terms of sales taxes. As Suresh mentioned previously, government introduced telecommunication levies some time back by way of combining VAT and NBT back then, and introduced that one composite tax for the industry. However, now telcos have 4 taxes, namely cess, telecom levy, SSCL, and VAT. So voice services alone is taxed at 42%, and data services around 23%. It's huge. So consumers to bear this is going to be a significant impact, and this will have a significant concern over, as I mentioned, on revenues and the profitability of these companies, and being able to continuously investing in the industry and to survive and to provide a better service for the consumers. Now we are talking about 5G. Whether telcos being able to invest into 5G, if they can't make enough profit, and if they are not able to or not affordable for them to kind of go into significant investment, will be a concern for the country. It will be a concern for the digital economy for sure. So it's something that government should be concerned of. I agree that at this point in time, just government revenue has to be increased, no doubt about it. But in terms of how you want to do that, has to be thought through carefully, because you can't kill the cash cows, or industries which bringing revenues to the government by way of trying to increase the revenues. So yeah, Ruchira, I'll stop it from there. Maybe can.
Yeah, Rohan, before you wind up, now tell me, now you were talking about the investments in the industry, how this will affect in attracting FDIs.
Ruchira, as I mentioned, any investor, local or foreign, would invest in an industry if they see that they can guarantee a return. Right? If you look at telco industry, especially small players, in entire industry, last few years are struggling in terms of bottom line. And I don't think at this juncture any investor would want to bring in any additional investment or FDIs into the country unless it is proven that it can generate you the return. So it will be a concern. But certain investors who are long-term focused would still be continue to invest and continue to try and survive in this condition, hoping that there will be a recovery and there will be a return in the longer run. But it is going to be a significant concern.
Thank you, Rohan. Now, from all panelists, I would like to ask this question. This question might not be applicable to some of you, but tell me now, with established companies who are VAT registered, there will be other companies competing who are not non-VAT registered. So how this will affect the overall competitive position in the market? Now, say for example, if a non-VAT registered person is selling the same thing with a VAT registered person, how it will affect the competitive position of the VAT registered person? Dr. Rajapaksa, I would like to get your views on this.
Rajapaksa is not there.
Dr. Rajapaksa is not there. So maybe other panelists can elaborate on this. So this might not be applicable for telco, let's say telco, and also for certain other sectors. But then in general, what do you think about this concern? About the competitive position faced by VAT registered persons competing with non-VAT registered persons selling the same items? Professor Anil?
Yeah, hello. Yes. Actually, as far as the essence of VAT is concerned, since that is borne by the ultimate consumer, if the input VAT and the collection is efficient, like so, there will not be big impact. So because it cannot add to the cost, like the cost of production, but that is charged to the ultimate consumer. But we know that the VAT registered person and non-registered person, so likewise, the all are not subject to it. As a result, maybe especially in the areas of small and medium enterprises, if they cannot get the input VAT credit, so we'll have to add that to their cost. If it is going to be, it really depends on how competitive the industries are. You know, like in Sri Lanka, you do not see such vibrant competition to great extent like duopolies or oligarchies control. In such a situation, like small and medium enterprises would face some problems as these additions would increase their cost of production, I suppose. That does not create a conducive environment for all the players to have a level playing field in economic democracy. Normally, we call that in order to increase an economy, we need to have a democratic economic situation that would really impair that situation in general.
Right. So, Professor, whatever now, since you are also in the panel, I would like to ask this question from you on the higher education. Professor
Why
Adil
don't you
has
ask on Jehan? Jehan is there on the IT industry.
Jehan, yes. Jehan can also talk about this, about the impact to professionals and also the impact to the IT and services industry.
So if I could just comment on what Professor Anil was saying just now, since most of the thresholds have been lowered, I would imagine that most of the companies now will fall within the need to register for VAT. The SMEs could have this challenge of unequal level playing field. So that may be a concern, I think, particularly with the phone industry, as Rohan also said, ensuring that there is compliance and that we don't create a gray market where people are circumventing some of these controls, and then you have the registered suppliers who properly adhere having to sell at a higher price, and those who are circumventing the controls then making phones available at a lower price. That we need to make sure that those controls are in place to avoid that. Level playing field is critical. Otherwise, the companies that properly comply and are contributing will be at a disadvantage. That we must make sure doesn't happen.
Thank you, Jan. So since we have reached the closing time, I would like to ask this question from all panelists.
Ruchira, impact on the IT industry, if you can ask Jehan, that will be good.
Yes, Jehan.
Sorry, what was that?
On the impact on the IT industry, this VAT.
Yes, as I was explaining previously, since most of our companies, Professor, are exporters, there may not be a direct impact to our companies. Those who are selling within Sri Lanka, most of them are in the B2B space. Again, they may not have a direct impact. But companies that have a business to consumer, they will see a big increase in prices, and affordability will become a question. Some of the demand may go down, particularly since some of them in the B2C space are competing with global companies that operate digitally, not registered here, and they will not be subject to the same rules. So that was a discussion that went on in Parliament as well about creating a level playing field. Generally, the IT companies may not have a direct impact since the focus is on exports. However, the concern on employees remain, and the general rise in prices, inflation is definitely going to impact our workforce.
Yes, Professor, would you like to add something onto this? I think we have reached 5 p.m. the closing time.
Yeah. No, I think you can ask the maybe final.
Yeah, maybe as the final question, I would like to ask the general opinion of all panelists as to whether the government would be able to achieve the expected revenue target because of these VAT changes. Mr. Atula? You are muted, Mr. Atula.
Can you repeat the question, please?
Yeah, I would like to know from all panelists whether the government would be able to achieve the expected revenue target from the VAT changes.
In my case, of course, I feel that it is very difficult, because what will happen, with the current situation, they have estimated these things but now with this cost of living, increasing cost of living, definitely the buying power will come down. As a result, VAT being a domestic consumption tax, when the consumption comes down, definitely the government revenue they'll not be able to reach the revenue what they have estimated. That's my
Thank you. Thank you, Mr. Ranavil. Mr. Gajendran, if you are there, I know you have touched on this earlier in your clarification, but then any final thoughts on this? So
I think he's muted.
I think he has muted. Suresh, maybe you can go ahead.
Yeah, I think in this budget, what is the incremental tax increase expected is 1.2 trillion. That's the 1,224 billion. So out of that, something like 720 billion is expected from VAT. So now for me, the first thing is as to how this computation was done. What are the assumptions that were made? What are the data that were used? Which of us, when this expectation, this calculation done, that calculation was done is correct. So whether this target called 720 billion will be achieved or not, I don't think as a professional I will be able to tell whether it will happen. So we have to keep the fingers crossed and see whether the manner in which this calculation was done and in practice whether this will be achievable is something that I would say let's keep our fingers crossed and see. It's too early for me to predict because I have seen the way in relation to the surcharge tax also how the prediction was made 100 billion, and then when the law was drafted, it was drafted covering not only the isolated companies with 2 billion but covering even the group of companies getting 2 billion, and then after that we have seen it exceeding the target, and thereafter they are saying that okay, we have achieved the target, but it's two bases that they looked at, because when they did the calculation for 100 billion, they looked at only 60 companies. So here also I'm not sure exactly what are the numbers that they have looked at based on to calculate this number.
So Rohan and Jehan, any final comments on this?
Ruchira, I think, yeah, if I may add to what is mentioned, yeah, so we actually don't have a visibility in terms of what the assumption used in the revenue estimate, which are very hard to comment. But having said that, few points to mention. One is not only that, with this demand or consumption reduction, there are many consumption-based taxes for telcos. If you see, as I mentioned before, there's SSTL and SSCL as well. So not only VAT, there will be revenue reduction from the other sales-based sales taxes as well. That's one point, whether that has been considered in doing the estimate. The other is with the profitability reduction, maybe there will be an impact on the corporate tax as well. So and overall there is a contraction of economy for shorter and medium term, that definitely will have a reduction in terms of expected collections. Whether this has been factored in when doing the estimate of rate increase and increase in taxes, not sure, Ruchira. So that's something we can't comment on, but these areas what I mentioned will definitely have an impact on the overall tax revenue.
Jehan?
As far as targets, I can't comment, but I would like to hope that they do achieve, and because there's going to be obviously a lot of pain that general public will feel, and it will be definitely a positive where at least some of the targets could be realized. I think key to achieving some of these things is digitization. So we must accelerate, and close the gaps with the RAMI system. Make sure that we get the customs fully digitalized. That will help bring in a lot more revenue from the right sources without just burdening the same people over and over again. So I would really advocate strongly for digitization in the government on an accelerated basis. And I do hope that we achieve and exceed our targets. With that be key to coming out of this and getting back to growth.
Correct. Thank you, Jan. Professor Vatavada, any final comments from you? Closing remarks?
Yeah, what I would like to say is, of course, I must thank all our speaker and the panelists because they've really gone into details on this. The two areas what we see is one is, of course, the targets that set by the government, and most of what you all have said is that that might not be achieved. But the other thing is the hardships that will be experienced by the society as a result of the cost of living going up. I think that seems to be the main area that the people are talking of. So whether the cost of living will go up and how it will impact. Also the inflation, now that's another thing, whether inflation will also start going up. So these are two important things, but I think what Jehan mentioned on the digitization, that is really something that has to go immediately, because I think the digital ID, you see, in a country like India, more than 1 billion people, if they can have a digital ID, I don't know why Sri Lanka can't do it, because you see, if you do that, you don't have to have all these other taxes because there are a lot of people who are not paying taxes. So that will really bring a huge amount. I think government should really understand this and immediately go for the digital ID, then the digitization of all the government ministries. Because if they do that, all their efficiencies will go up, their productivity will go up, and the cost will go down because they will not need all these people that they're having 1.6 million people. They will not need, they will really need 500 to 600,000 people. Others they will retrain and they either can get into maybe become entrepreneurs or go overseas. So government has to have a new thinking, this just trying to do these things which are going to harm the society and the public and the business. Because if the business people doesn't come, if the investment doesn't take place, then certainly we are going to be at a big loss. So I think the government needs to really get the ideas from the private sector. Now, costing, as I said, we have a Sri Lankan institute incorporated by Act of Parliament. So why is the government not using them? Government can use, you see, we are there, maybe the chartered accountants are there. Of course, they have said that the chartered accountants are teaching other people not to pay taxes. I don't think that is quite correct because they will not do that, but we can see as to how they can enforce this. So I think if this digital ID is brought in, definitely we will we'll be able to exceed and we can start repaying all these loans. So I think government should put a new thinking cap rather than just trying to postpone all these things. Get a loan from World Bank or whatever it is. If they have no money, do all the digitization, do everything, and then carry on and bring the professionals into the field. You say you can't do it. And of course, the main important thing of honesty and integrity. If people are playing out, if there is corruption, then also who is going to pay for that? The society is going to pay for it. So I think we need to have a complete change if we are going to do this, because bringing VAT and all these other things are really not going to help unless you really go to the root cause of the problems. I think that is what we heard from all our panelists and speakers here. I'm sure that this sort of webinar will really enable the government to get new thinking and to look at things in a fresh manner that will enable this country to repay these loans, because I don't know how we are really going to repay the loans after 2-3 years. We will have another rescheduling. So I think we need to really work on this and make the people realize that unless this digitization, if you do digitization, I think a lot of the problems will be solved. So let me also thank everyone for all the hard work. I think our moderator Ruchira, who has done an excellent job, and our presenter Mr. Atula Ranavira for the excellent manner in which he presented it, and all our panelists who made valuable contributions. And thanks a lot, and let me hand you over to our moderator, Mr. Ruchira.
Thank you, Professor. Thank you very much for your guidance as well. I must thank, in addition to what you have mentioned, our panelists for the keynote speaker and also for the panelists for taking time to answer these questions. I can see they have answered about 66 questions. So thank you very much, Mr. Ranavir, and also for panelists for taking time to answer these questions. We had a wonderful session, very informative session. So we hope to meet you again very soon with another interesting webinar. So until then, thank you very much. Good night.
Thank you. Bye.
Okay,
Thanks,
bye-bye.
everyone. Thanks, Anil.
Professor, shall we take a photograph?
Yeah. Can
Thank you.
everyone open their
Yeah.
Videos so that we can take a photo? All are there now.
Right, Professor. Thank you.
Okay, right. Thank you. Thank you, and
Thank you, sir.
Thank you.
all the
Thank you,
best.
Mr. Anavila.